Hi, this is Roger Michalski, publisher of Eagle Financial Publications. I'm here with Brian Perry, the editor of The Cash Machine and Quick Income Trader. Brian, we've been discussing your covered call strategy over the last several videos. You've walked us through an example on the whiteboard. You've told us how low risk it is. You told us how you can get a steady stream of income every month. And you've also told us what kind of account you need to use to set up to use the strategy. But how do you actually pick the individual stock and option to sell?
Okay, well, that's the secret sauce to this particular service here, Roger, and there always is a secret sauce to any good recipe. The business of a really successful covered call strategy is to not mess around with second, third tier names. You want to go with names where there's good institutional money flow. They're what we call the institutional darlings in the stock market, preferably stocks that have some volatility built into them. So they move around a lot, which gives you expanded covered call premiums, puts and calls. But in our case, we're trying to sell premium back to the market. So we want stocks that do move around a little bit so that we can sell an exciting amount of premium back to the market. And in doing so, I use what is called top-down analysis. Okay, where I look at the industry that's in, let's just say, technology. Is always a favorite for this particular kind of strategy. And within technology, we want to maybe look at cloud computing. Okay, one of the hottest sectors in the market right now. And then we'll look within the sector of cloud computing, then we'll try to find the right name to work with, whether it's Microsoft or Salesforce.com or ServiceNow or whatever may be the hottest names within the sector. And then from there, we have fundamental overlay, which is the earnings momentum behind the stock, and to see whether or not whether earnings are accelerating or matching estimates, beating estimates, top and bottom line. And whether or not it has what they call in that overlay technical analysis over the top of that to see if the stock is technically intact, whether it has the right relative strength, RSI, and momentum that we're looking for. Money flow is the lifeblood of most stocks in any given market. So we want to make sure that all those things line up. Fundamentals, technicals, and we want to also have a stock that prints a lot of good headlines so that you get a lot of activity and a lot of attention. And so that's where we want to key in on those types of names. And then also those typical names they'll be trading very liquid, millions of shares a day. And from there, they also have what is attached a very liquid option chain next to it. So there's a lot of open interest, a lot of people working with the options as either speculation or hedging or trying to just do what we're doing here, and that's bring in covered call premium as an extra form of income. So what I'll try to do then is buy the stock as it's breaking out of a base. Okay, so it's got brand new momentum, upside momentum with no real resistance, and then buy the first pullback as it breaks out. Most stocks, they break out, then they pull back, they retest their breakout level. That's where I want to make my entry point, and then I want to enter a limit order. Once I buy the stock, the second step is to go ahead and sell the covered call. And what we'll do is we'll sell them just out of the money strike price. So if the stock is trading at 40, we'll maybe sell the 42.5 call, just 5% up from where it's currently trading. And what we'll try to do is maybe get an extra 4 or 5%, maybe 6% from selling that covered call, the 42.5 call, for the next month and a half out. It's 30 to 45 days out. The combination of the two, if we get called out at 42.5 a month from now, is you're going to get 5% for the covered call premium that you brought in, plus the 5% appreciation from getting called out, and that's how we can manufacture a 10% total return. If the stock doesn't get called out and you just bring in the call premium, then you're bringing in 5% every 30 to 45 days. And if we do the math, that gets pretty interesting.
Yes, it sure does.
So that makes for a really great combination. Ideally, if you can find 5 to 7 names you can work with, where you can continue to go back to the same names month after month, and keep riding those horses, all year long. You get to know the stocks well. You get to see how you develop a rhythm for the stocks themselves, and at the same time, you understand how the stocks technically and fundamentally are aligned with the best momentum in the market, right? And you want to always kind of be sensitive to where the market rotates into the sentiment, and so we want to be also very sensitive to that too. But right now, certainly technology is a place where we're finding some really good candidates to work with.
All right, and you're doing that in your new service, Quick Income Trader. So tell us a little bit more about that.
Sure. Quick Income Trader is a service that's built on no more than 7 names working for the investor or the trader at any given time. And this is where we can concentrate our effort And what we'll do is we've designed a model portfolio that's around $50,000 as kind of a working number that a lot of people are comfortable dedicating toward this kind of a strategy. And so therefore, we're working with stocks that are priced at no more than $70 a share. Typically between 25 and 50 is ideal, so that we can use a 500 share position and sell 5 covered calls against that stock position. And if we can keep that money rotating over the course of the next 30 to 45 days, that's a wonderful situation, because you're making between, again, 7 to 10% total returns if that's the case. Again, if we can also just be in those names all year long and just bring in covered call premium and hold those names as well, then we're still getting our 5% roughly every 30 to 45 days on that.
Yep, and as you said, that adds up real quick. And Quick Income Trader, a new service of ours, and the response has just been overwhelming. I just can't believe the positive response we've gotten. People are getting their money back within the first month often. We just had a lot of very, very happy subscribers, a lot of interest in this. And if you'd like to order Quick Income Trader right now or learn more about the service, you can click on the link right below this video.